Good morning. Thank you for joining today's daily webinar. Today's topic is what is the maximum 401k contribution for Mega Backdoor Roth Solo 401k plans? So go ahead and shoot over any questions you have on the live chat. We use these daily webinars to not only cover certain topics, but to also answer questions that you might have live on the air here. As always, today's daily webinar is for educational purposes. We're not going to be providing any tax or legal advice on today's daily webinar or any financial recommendations, but we are going to provide educational support. Again, today's topic is what is the maximum 401k contribution for the Mega Backdoor Roth Solo 401k plan. Okay, we'll get started now, and as questions come up, go ahead and sit them over on the live chat, and we'll go ahead and get those answered. So before we can determine what the maximum contribution is for the Mega Backdoor Roth Solo 401k plan, let's first define what the Mega Backdoor Roth Solo 401k is. So the Mega Backdoor Roth Solo 401k plan, it's used to describe a few things. Number one, the fact that if you are self-employed with no non-owner W-2 employees in your business who work full-time, then you can open up a solo 401k plan, aka self-directed solo 401k plan. The solo 401k plan will allow you to make various contribution types. It used to be that you could only make pre-tax solo 401k contributions, and then Congress changed the regulations, and then it allowed for designated Roth solo 401k contributions, and then subsequently for voluntary after-tax solo 401k contributions. It's the last one there, the voluntary after-tax solo 401k contributions, that we want to hone in on, because those are the ones that are connected with the Mega Backdoor Roth Solo 401k plan. So you can make the various contribution types to a solo 401k plan, as we touched on there, which are pre-tax contributions, Roth contributions, and voluntary after-tax contributions. When you make voluntary after-tax solo 401k contributions, it has to be done in a way that you don't exceed the annual contribution limit. So the overall contribution limit for tax year 2024, for example, is $69,000. For tax year 2025, it increased by $1,000 to $70,000. So there's a way where you can contribute the full overall contribution amount as a voluntary after-tax solo 401k contribution. So you could conceivably still contribute $69,000 for tax year 2024 as a voluntary after-tax solo 401k contribution, and that can be done here in 2025 by your business tax return due date plus timely filed extension. What is more, let's say that John is looking to open a solo 401k plan for the first time. Well, we are here in 2025. John will be able to open a solo 401k plan here in 2025 so that he can make Mega Backdoor Roth solo 401k contributions for tax year 2024. So as long as John is self-employed, he can open a solo 401k plan in 2025 by his business tax return due date plus timely filed extension, and he's going to be able to make that $69,000 voluntary after-tax solo 401k contribution for tax year 2024, and then immediately convert it here in 2025. John will, of course, qualify to make 2025 contributions as well, including that voluntary after-tax solo 401k contribution. So if he has enough earned income in 2025 from a self-employed business, just like he had to have enough earned income in 2024 to make that $69,000 contribution, then he can also make that $70,000 contribution as a voluntary after-tax contribution here in 2025, or he can wait and do it in 2026 for 2025 by his business tax return due date plus time he filed extension in 2026. Once you make that voluntary after-tax solo 401k contribution, the final piece of the puzzle is to then convert that voluntary after-tax contribution to the Roth solo 401k plan as an in-plan conversion or to a Roth IRA. And that'll complete the Mega Backdoor Roth solo 401k strategy. Now let's take a look at another page here. Let's talk about the Mega Backdoor Roth Solo 401k plan. Let's talk about some more of those rules. So, with the Mega Backdoor Roth Solo 401k strategy, when you're trying to determine the maximum contribution for the Mega Backdoor Roth Solo 401k plan, you need to understand a few items. Number one, it comes down to what's referred to as the overall 415 limit. The 415 limit essentially says that the maximum contribution for the year is the most you can contribute to the plan. So we just touched on how the overall limit, that 415 limit for tax year 2024 is $69,000, and that you can still make contributions here in 2025 for 2024 and even open a solo 401k plan here in 2025 and make contributions for 2024. So the overall limit would be $69,000 for 2024, $70,000 for 2025. So now it's important to understand that catch-up contributions, which is that $7,500 catch-up contribution that you can make to a solo 401k plan if you're age 50 or older in 2024, or even if you're age 50 and older in 2025, you can make a $7,500 catch-up contribution in 2025 as well. However, that catch-up contribution can never be applied to the voluntary after-tax solo 401k plan. Therefore, catch-up contributions do not count towards the maximum 401k contribution for the Mega Backdoor Roth solo 401k strategy. Instead, those catch-up contributions can be deposited to the pre-tax solo 401k or the Roth solo 401k here in 2025 for 2025 or in 2025 for 2024. Now, there's also a new catch-up amount of $11,250 for those who are age 60, 61, 62, or 63. So those can also make a catch-up contribution of $11,250 instead of $7,500. So it only applies to that age group. And again, that super catch-up cannot go or cannot be deposited as part of the Mega Backdoor Roth solo 401k strategy. So that's another item to know when determining the maximum 401k contribution for the Mega Backdoor Roth solo 401k strategy. Now, again, please shoot over any questions you have here in the live chat. Please also like our video, our YouTube channel, share it with others in your network to help us get the word out to other solopreneurs like yourself so that they are aware of this great Mega Backdoor Roth solo 401k strategy. You would be surprised how many individuals, including tax professionals out there, are not privy to the Mega Backdoor Roth solo 401k strategy. Now, another item to know about the Mega Backdoor Roth solo 401k strategy is that even if you max out your contributions to your daytime employer 401k, you're still going to qualify for the Mega Backdoor Roth solo 401k strategy. So what would be the maximum 401k contribution for the Mega Backdoor Roth solo 401k strategy if you are also contributing to a daytime employer 401k plan? Well, it's going to be the overall limit. So you can contribute another $70,000 as a mega backdoor Roth solo 401k strategy for tax year 2025, even if you max out your daytime employer 401k contributions. For example, let's say Sally works for a full-time W-2 employer. She's not an owner in that business. She's a common law employee. And let's further assume that Sally maximizes her 401k or even profit sharing contributions to that daytime employer 401k all the way up to the overall limit of $70,000. Let's further assume that Sally is also self-employed through her S corporation business where she is an IT consultant. So Sally can sponsor a solo 401k plan through her S corporation. Let's further assume that Sally is going to report at least $70,000 of W-2 wages from that S corp self-employed business for 2025. Sally could contribute that entire $70,000 as a voluntary after-tax solo 401k contribution to the solo 401k plan, and then turn around and convert that over to the Roth solo 401k through an in-plan conversion or to the Roth IRA. So that's the maximum 401k contribution for a mega backdoor Roth solo 401k strategy for a person such as Sally, who is also contributing to her daytime employer 401k. So that's a really good way to really supercharge your retirement account savings, resulting in Sally contributing $140,000 for 2025, $70,000 to her full-time employer 401k, and another $70,000 to her solo 401k as a voluntary after-tax solo 401k contribution, and immediately converting it to the Roth IRA or the Roth solo 401k. Okay, let's see. It looks like we have a question here. Let's take a look at that here. We get to that. Okay, so we got a question here from Nick. Thanks for the information on the mega backdoor Roth contributions. At the end of your prepared section, could you please advise where I can find info on how to restate an existing solo 401k plan already at Fidelity with my solo 401k plan? Certainly. Thanks for the question. Again, these types of daily webinars are for you to shoot over questions, and we cover certain topics. So great question. Let's take a look at some information here and go over the fact that you want to restate an existing Fidelity solo 401k plan to a solo 401k plan with my solo 401k financial. Okay, here's a great page from our website, and I'll shoot this over as well here on the live chat. So you can certainly restate an existing solo 401k plan at other institutions, whether it's at Fidelity, Charles Schwab, even a Census, that's a popular one right now, even E-Trade, even from one of our competitors. Even if a business out there got swallowed up, I know there's been some consolidation in the self-directed 401k field over the last couple of years. There's a company out there that consolidated called Safeguard Financial, it's my understanding. We've had clients come over to us from that institution. There is also a company called Quest IRA. They had clients restate to us as well. So let's hone in on Fidelity. So this link here is a way to restate a solo 401k that you have at Fidelity to my solo 401k plan. And there's a way where you can still use Fidelity for the brokerage accounts. Yes, you heard that right. While Fidelity offers their own solo 401k plan that does not allow for the mega backdoor Roth solo 401k strategy, they will provide what they refer to as company investment only non-prototype retirement brokerage accounts for a self-directed solo 401k provided by a provider of the mega backdoor Roth solo 401k strategy, such as our company, my solo 401k financial. So that plan at Fidelity would get restated to our plan. So now you fall under our plan, resulting in you being able to utilize the mega backdoor Roth strategy, as well as qualifying for a $1,500 auto contribution credit. It's effectively, the IRS will be subsidizing the cost of having a solo 401k plan for many years. It's a $500 per year over a 3-year period, totaling $1,500 auto contribution credit. So when that plan is restated to my solo 401k financial, you're going to qualify to make voluntary after-tax solo 401k contributions as well. And we will assist you in opening up brokerage accounts at the institution of your choice, including Fidelity if you want to use them. You'll be able to open up those brokerage accounts with Fidelity, and we'll shepherd you through that process, and then we'll help you move the existing Fidelity solo 401k plan internally to the new plan offer with us, resulting in having a plan with us and holding the funds at Fidelity. And you are going to be able to execute that mega backdoor Roth strategy. So again, take a look at that page. We'll handle the reporting going forward. That mega backdoor Roth solo 401k strategy requires the issuance of a Form 1099-R. That's a service we provide timely for our clients who timely request it at no additional fee. That's covered in our annual pricing. We'll also handle 5500 easy reporting and so forth. So take a look at that link. We can also do a restatement from existing plans over at E-Trade, like I mentioned earlier, as well as the census. Schwab's another one that we can restate from and still continue to use Schwab for the brokerage accounts, as well as other institutions. All right, thank you for the great question there. Again, please subscribe to our YouTube channel, like our video, share it with others to help get the word out to other solopreneurs like yourself. Let's finish talking about the mega backdoor Roth solo 401k. Today's topic is what's the maximum 401k contribution for the mega backdoor Roth solo 401k plan. We just went over that extensively. Let's just kind of tie it up here and then we'll be done for today. And then we'll be back again this afternoon to discuss other topics as well as any other live questions you might have. Okay, so with the mega backdoor Roth solo 401k strategy, there are various steps in the process. This is a great page here that goes over those steps. I'll share this link with you right now so that you have it at your fingertips. So with the mega backdoor Roth strategy, again, if you want to maximize your 401k contributions using the mega backdoor Roth solo 401k strategy, you have to follow certain steps. So one, you got to make sure you open up a self-directed 401k plan with a solo 401k plan document provider who allows for the mega backdoor Roth strategy. My solo 401k financial is such a company that does. Traditional companies like Fidelity's, the Schwab's, the E-Trades of the world do not. They may allow for Roth contributions, but not the mega backdoor Roth solo 401k strategy. So you first need to make sure you use a provider who allows for it. Second, after you set up that plan with the mega backdoor Roth solo 401k plan provider, then it's time to set up those brokerage accounts to hold those voluntary after-tax solo 401k funds. It's a dedicated account specifically for holding those voluntary after-tax solo 401k funds. It's still the same plan, just a dedicated holding account, aka bank account or brokerage account, to hold those voluntary after-tax contributions. You're also going to need a separate brokerage or bank account under that same plan to hold those Roth solo 401k funds. So then step two is to make the contribution, that voluntary after-tax solo 401k contribution. And here at my solo 401k financial, we shepherd clients and helping them understand how to calculate that contribution, as well as perform that calculation for them, and then shepherd them on how to perform that contribution. And then once that contribution is made, then you convert those funds to the Roth solo 401k plan or to a Roth IRA if you decide to convert it to a Roth IRA instead of the Roth solo 401k. Then we need to document that conversion. So you're going to complete our online conversion form, which is found here under the Forms tab. That's how we collect the necessary information to issue that Form 1099-R, which is the final step in the mega backdoor Roth solo 401k strategy. That gets issued. We'll go ahead and issue that, file it with the IRS, and a copy to you to report it on your taxes. So these are the steps Now, we oftentimes get a question regarding, okay, should I convert to the Roth IRA or the Roth Solo 401k? Specifically, they ask, can I convert my voluntary after-tax Solo 401k contribution to the Roth IRA or the Roth Solo 401k? Well, generally, most clients will convert it to the Roth Solo 401k plan because they want to keep the funds within the same Solo 401k plan so they can aggregate all of their funds in one retirement plan. Also, a Roth Solo 401k, just like a Roth IRA, is not subject to require minimum distributions, which apply to traditional IRAs and pre-tax Solo 401k funds once you reach retirement age, which is age 73. Or I shouldn't say retirement age, but more, I should say the require minimum distribution age of 73. So again, that require minimum distributions do not apply to Roth IRAs, nor does it apply to Roth Solo 401k plans. Another reason why clients like to convert to the Roth Solo 401k plan instead of the Roth IRA is they want to have that option to take a participant loan from the Roth Solo 401k plan, which is not allowed from a Roth IRA. There are some other reasons there as described here on this chart here. Take a look at that. Okay, it looks like we have another question here. Let's take a look at that question. So we got a question here from a consultant here. The question is, my CPA had me pay myself $30,500 of W-2 wages for my self-employed S corp due to lack of understanding of the solo 401k. Is there any way that I could contribute more? You certainly can. You just need to keep in mind that contributions to the solo 401k plan are based on your earned income from self-employment activity, which means that if your self-employed business, like in your case, is an S corporation, you're going to pay yourself from that self-employed business through a W-2. So your contributions are going to be driven by how much W-2 wages you receive. So for instance, if you received at least 69,000 of W-2 wages for 2024, you could contribute that entire $69,000 to the solo 401k plan here in 2025 by your business tax return due date plus timely filed extension. Now, if we're looking at 2025 numbers, if you pay yourself at least $70,000 of W-2 wages here in 2025, you're going to be able to contribute all the way up to $70,000 of W-2 wages. So you need to make sure that you do the work to justify that high $70,000 salary, and that you report that on your W-2. So that's some good information to discuss with your tax professional there. Okay. Again, thank you so much for all the great questions today. We'll be live again today in a few hours for our 1 p.m. Pacific Time daily webinar. We'll be back again here tomorrow for a couple more webinars. Yes, if you only receive $30,500, then you cannot contribute more than that. Because with an S Corp, if it's taxed as an S corporation, your self-employed business, it's going to be driven by W-2 wages. If you only reported $30,500 of W-2 wages, you cannot contribute more than that. In other words, you can't contribute more than you make. And it cannot be more than 70,000 with regards to the contribution. All right, again, thanks for joining today's daily webinar. Please subscribe to our YouTube channel and help get the word out to other solopreneurs. And until next time, have a great day.